Hello and welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Let's take our business top stories. Glad to have you back. Now, let's give you highlights of the stock trading as it went down yesterday on the floor of the Nigerian stock market. The market closed in the negative territory there, 0.8%. And of course, the market capitalization lost about 757 billion naira. Of course, you know the issue with regards to the delisting, or what we call downgrading of Nigerian stock market from the frontline to unclassified. That is actually impacting on the stock trading on the floor. 645.540 million volume of shares, value at 11.01 billion in the deals of 10,554 exchange hands among investors on the day. We look at the gainers. The top gaining equity, Computer Warehouse Group, a software company, gaining 10% there to close at 6 naira 93 kobo. You go down there, you see Shelaram on the gainers table today, 10% it gained to close at 3 naira and of course 19 kobo. We go down to see Vitafoam. Vitafoam gained 9.78% to close at 24 naira 70 kobo per shares. Let's look at the losing equities. Academy Press, a printing press company, is there, 13.04%. That is a huge number. It lost on the day to close there at 1 naira and 80 kobo per share. And Transat, again, for second day running, maintaining that position on the gainers table. 10%, a huge number it is as well. It lost on the day to close at 8 naira 10 kobo. If you go down as well, we see Redelinghuys, not so regular there. It gained 10%. It lost 10%, I beg your pardon, to close at 36 kobo per share on the day. Let's look at the sectorial performance. Of course, the top traded equities. Transcorp Nigeria, 87.8 million volume of the company shares were traded on Tuesday. United Bank for Africa traded 75.8 million shares, and of course Access Bank Holdings traded 69.4 million volume of shares. Of course, two banks and of course one of the big conglomerates there are doing so well on the floor. Let's look at the performance across key sectors. Key sectors, the banking sector, the worst hit from the ongoing sell-off by investors there. 2.60% it lost on the day as well. Why industrial sector gain marginally 0.03%. If you go down, consumer goods sector 1.72%, and of course the oil and gas sector closed flat on the day. Not much activities there, and the insurance sector also lost 2.31%. percent. Let's look at the rest of Africa, and indeed to see how they are doing. Is 2/1 today, or 1/2 you may want to say. JSE down there, Joburg is down 1.18%. If you go to Ghana, it's up marginally 0.5%, and of course in Nairobi, Kenya, the market is up 0.59%. We'll take a very quick break now. When we come back, we'll discuss extensively what this downgrade by FTSE mean for Nigerian capital market and indeed the Nigerian economy. Don't go away. Glad to have you back. It's still Business Daily right here on Trust Television. Now we go into our discussion. What is the implication of FSTE, Financial Times Stock Exchange, downgrading the Nigerian stock exchange from the frontline down to unclassified? What is the implication of this on the capital market and indeed the larger economy? I have two gentlemen who understand what this means, and they join me. Charles Fakrogha is a stockbroker. He joins me virtually from Lagos, via phone rather, from Lagos. Good morning, Mr. Charles. And from Joburg, I also have investment trader and founder of Herenya Capital Advisor, Mr. Petri Redelinghuys. Good morning, Mr. Petri.
Good morning. Thank you for having me.
All right, let me start with you there. This downgrading of a capital market from a frontline to unclassified. Tell us, what does it mean and what is the implication on investors' confidence?
Okay, so I think, well, where do I start? I think the easiest thing to sort of start with is just essentially what it means, right? Nigeria has been seen as a frontline or a frontier market for some time, being that it's a relatively small economy, but it is to a very, very small extent included in some of the international indices. So if you look at the Emerging Market Index, or the All Country World Index, or even the All Africa Index, right? Nigeria has a small representation in each one of those indices, which means some of the companies in Nigeria and listed on the Nigerian Stock Exchange are included in these indices, which means that when companies, big international funds, want to track these indices, for example, or create financial products like exchange-traded funds, or potentially even unit trusts, or mutual funds that invest in these particular indices, that Nigeria has a representation there, and that some of the companies in Nigeria then pool that international investment. So Nigeria has now been downgraded per se, or so to speak, to unclassified, and essentially are being removed from these various indices. Now look, the index constitution, the amount essentially that Nigeria represents here is like 0.1% of these indices, right? So it's not exactly a situation where Nigeria was a big influence on these indices to start off with, because Nigeria is still classified, at least on a global scale, as very small. So it makes a very small difference in the global indices that Nigeria is no longer there. What it could mean is that funds and corporates that are invested in these indices might have to now sell their exposure to Nigerian stocks. So there might be some selling pressure coming through the Nigerian stock market, right? The reason why this reclassification took place is because recently, obviously this is something we've spoken about a whole bunch, is there's been a whole bunch of reforms from a policy perspective from the Nigerian government. One of them is, of course, that the currency has been moved from a peg to a free-floating system, right? So, in other words, the currency's value is now determined purely by supply and demand for the currency, and no longer by government intervention, pegging it to some other currency, and essentially the central bank controlling the exchange rate. The exchange rate is now set essentially by the free market and by the forces of supply and demand. So this, in the long run, is a positive thing. However, in the short run, it takes time, a little bit of time for the system to adjust. So what's happened in the interim over the last couple of weeks or over the last few months is that there's been an imbalance in the forex market. So what's happening is there's more supply within the borders of Nigeria for offshore currencies like the US dollar, for example. There's more demand than what there is supply. So it's hard to get your hands on dollars, which has made it difficult for companies to expatriate money, international businesses that operate there. It's made it hard for local importers, for example, to be able to pay for goods that they're importing from other countries. And it's been hard for exporters to get paid for the products that they export. So this lack of liquidity is essentially the primary reason why this classification change took place, why they changed the status from a frontier market into an unclassified market, right? Simply because there's this liquidity problem that it's really difficult to get money in and out of Nigeria at this stage because of this. The system is really kind of rebalancing and adjusting itself, and it's taking some time to do that. Now, we know that if you allow essentially the economy to do it by itself, is going to take very long.
All right, Petri.
Process. And we know that also we can see that the Nigerian government is aware of this too and are making plans. I think there's something like $10 billion that is necessary.
Petri,
so the Nigerian
hang on there. Let me bring in Mr. Charles Fakrogha, a stockbroker who joins me via phone from Lagos. Mr. Charles, good morning.
Good morning, Yusuf.
Yes, let's look at this downgrade now. Is it like a transfer of aggression against the capital market based on the default of the CBN in settling its forex obligation to investors? That is what some people are saying.
Well, I would not say it's a transfer of aggression. My fellow analysts at the studio there have said, yes, illiquidity and all that. Yes, it's a policy of the federal government to unify the naira, one exchange rate, demand and supply. We have seen all that. Yes. But again, you have these companies that are operating in the country. They need to take their profits in terms of what they have done. Absolutely. And if there's scarcity of dollar, then it becomes a problem. Then the Financial Times Stock Exchange, in England, London there, this is one of their subsidiaries that does what we call index, and most of these analysts make use of this index for their analysis and other issues. Now, downgrading Nigeria from frontier, which is an emerging market, to unclassified, for me, if you look at it, it is okay, because we are looking at liquidity in terms of doing business internationally. And if you cannot get that, then of course it's a sign to investors that, look, when you're coming to Nigeria, these are the issues. But again, like you already said, it's a short term. It is just an adjustment of what we are going through, which we are going to experience for the time being. But what we should be thinking in Nigeria here now is not whether it's a transfer aggression. We saw how the market is reacting, particularly the banking sector. We saw how they all react generally. So what Nigeria should be thinking of now is to improve liquidity when it comes to our dollar. And how do we do it? To see that we export more, for us to earn more of dollars, foreign exchange, non-oil sector, then also increase our export of our oil, block leakage, so that we have enough dollar, so that there will be liquidity in the FX market. If you look at the I&E window, there's a lot of issue. The demand is so high, supply is limited. So that is the issue. So whether we are classified as from frontier to unclassified, yes, it's a temporary thing. By the time we improve our export to earn so much dollar, then we have enough supply of FX.
All right.
Then we will see an improvement in our economy. And of course, I know after watching us, these index providers, the FTSE Russell Group, will place us back to where we belong to. Because I know with time, we'll get back to where I'm supposed to be.
All right, Mr. Charles, we are seeing the effect of this downgrade on the capital market already. Over 700 billion naira has been lost over 2 days of stock trading. How much of collateral damage will this do you think this will have on the reputation of our capital market?
Yes, our market is dynamic. Our market does not operate in isolation. Global activities affect our market, and this is coming from the global capital market, and we are going to continue to experience this. Yes, the market will react because we have a lot of foreign investors in our market. They will react, but like I said earlier, it's now the duty of the Nigerian government to let the international capital market or the national community knows that these policies are aimed towards improving our economy in the long run. But in the short run, yes, I will encourage investors, especially the international investors, foreign investors, that they should not panic. It's just an adjustment in our FX policy. Right. And with all the measures being put in place now to improve our dollar receipts, I see an improvement. However, the market will continue to react because the market is a market and it must react when there are issues that are not too favorable in terms of people coming into the market and leaving the market, to take their profit. So it's just it's a short term. So I will advise most of the foreign investors to have a long-term perspective in the Nigerian market and be patient. Therefore, local investors, they should not panic. Market forces will determine everything. But the Nigerian government is doing all it takes now to ensure that we increase and improve liquidity in the FX market.
All right, Mr. Charles, hold your thoughts there. Let me get back to Petri now. Mr. Petri, let's see how much of this, impact or repercussion for Nigeria, how much would this have on the visibility of Nigerian market on the international investment landscape?
Just to reiterate, I think what your other guest said is quite right. Most of the funds that are investing in Nigeria are not tracking these international indices anyway. So I don't think it's going to make that much of a difference. The type of investor that's coming to invest in Nigeria is doing so specifically because they believe in a particular company or sector within the Nigerian economy. They're not doing so because they are following the index, if you will. So truthfully, I think that a number of things will happen. I mean, I think that your market is trading record high volumes. Your market is sort of making new all-time highs as well. You've had a really, really strong 3-month period. And these are all the result of positive sentiment created by these policy changes. So yes, now there are some teething issues where the system has to adjust a little bit, and there's a bit of a shortage of foreign currency and a bit of a lack of liquidity, and that could potentially put a little bit of selling pressure on the Nigerian market. I think that it probably creates a bit of a pullback in the markets, if you will. But I don't think that it changes the viewpoint to extremely negative. I think that those who are watching Nigeria, and if you even look at what the FTSE said, as I said, well, look, Nigeria now goes onto a watch list, and we change the way that we look at them, because before we were looking at them from a frontier market perspective. Now we look at them from a new market perspective. And once the adjustments are and the teething process is over, and forex reserves are bolstered again, and this current liquidity problem goes away, which it certainly will over time, it changes the picture completely, and it might even then lead to Nigeria being included in future indices or in different indices on a larger scale. So I don't think that it's going to have a tremendously negative impact. I think that the international community looks at this and think, well, we're seeing a country or a government taking the right steps in order to bring itself in line, to make itself more investable to the outside world, free-floating currencies, better policies in place. I think these are all positives. I think it's just, like your previous guest had said, there's an adjustment period. There's a little bit of hard times that you have to go through in order to get to the reward in the end. And that's really what's happening now.
All right. Petri, this rating is coming at a time where our index is approaching about 70,000 mark, almost chasing that of Johannesburg Stock Exchange at a time. Many analysts in Nigeria are actually saying, well, the rating is to them is surprising. Why is it coming at a time where the market is doing well?
Well, it's not really, I would say, coincidence is not necessarily, correlation isn't necessarily causation. It's a couple of things are happening, right? The market over the last 3 months has had the strongest 3-month period in a very long time, right? Potentially ever, right? And that's on the back of the positive sentiment created by these policy changes. However, these policy changes did in the short term create a bit of a liquidity crisis within the forex space. So there is a shortage of foreign currency in Nigeria, and that rebalancing needs to take place now. So there's a lot of positive sentiment that came with it, which obviously pushed the Nigerian stock market up, and also the amount of participation in the stock market. If you look at the volumes traded, the number of shares trading every day, that's also at record highs for Nigeria, right? So that's indicative that there's a lot of interest in the Nigerian stock market, a lot of interest in investing in Nigeria, and people are using the stock market as a vehicle to invest in Nigeria. However, because of the, I want to say, the rapid adjustments that the Naira had to make, and the big moves that we've seen the Naira make as it kind of finds its fair value in the market, that's led to a shortage in currency, and that shortage in currency is now starting to have a negative impact. So I wouldn't say that there's any real relation between the downgrade as well as the market being at the highs. I think it's just a coincidence. I do think that the market probably comes down a little bit from here, which is probably a good opportunity for patient investors to buy. Well, wait for lower prices and buy in 2 or 3 months from now if the market comes down. I think in the long run, this is very good news.
All right, Petri, let me get back to Mr. Charles now. Mr. Charles, despite the sell-off that we've seen over 2 days of trading, we are seeing that the fundamentals in the market so far favors the banking sector, while other sectors seems to be suffering some, deteriorating fundamentals. What more can you tell us? Why is the banking sector always remaining attractive despite the challenges in the market?
Yes, you know that the banking sector, financial service industry generally, in any economy, is the engine. When that sector squeezes, other sectors will catch up. Cool. You can even see, let's take even the ones we call the FUGA, First Bank Holding, Union Bank, GTB, and of course Access Bank and then Zenith. You can see that there is a much more impact on this bank, despite their fundamentals. Zenith Bank has just announced 50 kobo dividends, even UBA, Access Bank. So you can see that the fundamentals are still there despite this downgrade. Like your guest said, the downgrade is correlation is not causation. Okay, so it's just a short-term readjustments. So for the banking sector, still positive. I would still encourage investors to do their homework very well before investing. The Nigerian market still remains one of the best markets in the world in terms of return. Year till date, it has done over 30%. And we can see that, yes, this pullback that we are going to be experiencing in the market is an opportunity for other investors to get into the market and begin to position themselves to take advantage of the improvement we're going to be seeing later.
All right, Mr. Charles, let me give Mr. Petri 30 seconds there to talk to us about how is the JSE doing today. Petri, how is the South African Stock Exchange doing at the moment?
Oh, we are feeling the pain today. It has not been a great day. We've had 3 days of sort of the market bouncing a little bit, but today we are down 1 3/4%. So the market really coming under quite a bit of pressure. I think there's, it does also look, I mean, it's on the back of a poor session in the US last night. We've been quite bearish over the last couple of weeks.
All right.
And we do think that it's time for the markets on a global scale, at least, to pull back a little bit. So we've been shoring up cash holdings and buying some energy and some gold. And the market is looking to come down a little bit. So the market at this stage, the JSE is kind of approaching a key level that we've got earmarked is 67,000. If it breaks below that, I think we probably continue to see further downside. And a lot of this is driven by, international sentiment, but also load shedding is getting worse in South Africa again. So that's poor for sentiment. So it's a tough day, and I think we're in for a tough rest of the week also, to be honest.
All right. Petri Redelinghuys, investment trader and founder of Herenya Capital Advisor. I must thank you for your time. And also Charles Fakrogha, stockbroker, talking to us all the way from Lagos, Nigeria here. I must thank you also for your time on Business Daily. We appreciate your time. All right. So with that is a wrap on the show today. Join us tomorrow for more. I'm Yusuf Akogun.